Global markets are in the red this afternoon as investors are concerned that central banks around the world will continue to raise interest rates in a bid to stem inflation. Asian stocks, which had pulled away into green territory, have also tracked global stocks into negative terrain. We're now joined by Roy Mutooni. He is an analyst with Sanlam Investments. Roy, thank you very much for your time. Not such a good afternoon. Markets are in the red. The JSE is also in a slump and the rand has followed suit. What's going on in the global market and here at home?
Hi, thanks for having me. No, for sure. The local markets have followed the trends that we saw in Asia and the US yesterday. It just seems with yields, 10-year yields getting over 4%, the whole risk off environment seems to be coming through, and investors are going into fixed income rather than equities. In the local market, it's on the top 40. It's only Aspen that's positive, and that's on the back of results. Everything else is down, especially the big stocks and everything. All of them are down, and I think it's just following the trend that we've seen internationally, and this is something we should expect for the next couple of days.
Well, one day you're the pigeon and the next day you're the bird. Well, you're the statue, rather, because FNB owner First Rand says they continue to make great returns for shareholders, but they also say the prevailing economic conditions are worsening. Give us a sense of how they performed.
So they were reporting for the first half. Remember, they're the only bank that doesn't have a full year in December, so their first half ends in December. But it was quite a solid result. They saw stronger loan growth, which is always a good thing for a bank. And their returns are still above 20% on an ROE basis, so quite good results. But exactly like you say, they're seeing the slowdown coming. They might be saved by all the capital investment that may come through on solar and renewable energy and everything, but in their minds, they feel the economy is softening and they need to be a lot more careful.
Well, AB InBev have beaten profit expectations despite selling less beer in China due to the lockdown. What else is in their full-year results?
So this was a result that was quite solid. Exactly like you say, they sold less beer, and costs were up. But then when you look at the detail, there was actually quite a good result. So they increased their dividend by about 50%. Their debt declined, because these are the things that people worry about with this business. Their debt declined, and they were able to pay a higher dividend. And their guidance for next year has actually been maintained with an EBITDA growth of between 4 and 8%. So that's a good thing. And I think the market will like that result once it's been well digested.
JSE-listed shipping and container operator Grindrod says the business has finally recovered exceptionally well following the devastating floods in KwaZulu-Natal. What do their financials show?
So they seem to be benefiting a lot from Transnet's problems because their ports and terminals business really did well. Volumes at both of those were up over 20%. Revenues up about 60%. Cash generation up 60%. And they even declared a special dividend. So their total dividend for the year was about 95 cents relative to last year's 20 cents. So quite a solid result, and I think the momentum for this stock continues for as long as all of that traffic and commodity exports continue through their ports and terminals. So a good result.
As we continue to count the costs of load shedding, insurer Sanlam says they're experiencing high claims due to power surges from load shedding. How did they perform?
So this is one of those ones where you on the one hand and on the other. So on the one hand, I think their bottom line result went backwards, but that's what we expected. And that was on the back of what they called the worst catastrophe they have ever experienced in their 100-year history, which was the KZN floods. But on the other, the investment side was actually quite solid, and they grew earnings on that side. But even they are saying claims experience is getting worse, which means, I guess, load shedding related and that sort of thing is still continuing to grow. And they're seeing a bit of a slowdown going into the balance of the year. So cautionary, reasonable result on the surface. But I think the relief is that they've been able to get out of that, the problems they had around the KZN floods.
Market analyst at Sanlam Investments, Roy Mutooni, thank you very much for your time.